Okay, so my name is Jeremiah Kendagor. I'm a Forex trader. I also trade for the bank as a dealer. So this subject is quite dear to me, and I'm proud today to present to us the London daybreak strategy. It's normally referred to as the London daybreak strategy. What I like about this particular one, and I borrowed this from the main trainer in one of the top trainers in IAM, Bas Koitman. He trains this particular strategy in his Dutch channel, which is channel number 2 for those of you who are in IAM. So this is a strategy that he trades in that session. The only thing that I've done is I've done slight modification on this particular strategy, and I'll mention that before. This is the number of pips that you see here, 573, was what I observed during the week leading to leading to the 8th of December. So probably that's why that's what this is about. So basically, without much ado, I'll go through the strategy today. And there's also something that I'd like to share with us on the best entry strategies when you are entering into a trade, which I think would be useful even going forward for your trading. So I'm glad today, this evening, I think we are going to, as I mentioned in the chat groups, we are going to have a very busy evening. I think at 10 o'clock we will have the market mastery, and at 1 o'clock there will be the chairman call. So I think that will be, this is a very interesting evening for us today. So without much ado, let's begin. And I'll begin by just giving us a disclaimer, all right? And we mention this every time we talk about foreign exchange, especially when we are talking about you making money. It's also important to give this disclaimer that trading in foreign exchange is involves high risk and may not be suitable for all types of investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. And of course, I'm not giving any trading advice. This is purely for educational purpose, all right? So without much ado, one of the most important things in trading, and especially whether it is this strategy or any other strategy, is to make sure that you are doing your money management risk correctly, all right? And normally, one of the ways in which you can do that is making sure that, and especially for this particular strategy, you only trade a maximum of 0.1 lot size per $100 balance. And when we are talking about balance here, we are talking about your equity, all right? Your equity balance, not your balance. Because when you go to MT4, normally there is what the MT4 shows as your balance, and then there's what it shows as your equity balance. Now, this refers to your equity balance because your balance may include will exclude floating trades, okay, or what floating trades are taking, all right? And your account should not have more than 5 open trades, all right? And normally you trade with a stop loss of approximately 30 pips or less. Although for me specifically, this is actually where I have modified slightly in terms of how I trade myself. You will find that most of the traders, these top traders, sometimes do not use stop losses, all right, which can be a risk for you, okay? So sometimes I am a bit generous in terms of how fast the stop loss is. In fact, sometimes I use 60 pips, all right? But that is something that you might want to experiment on yourself, by yourself, on how much, what stop loss level you need to place, all right? Now, the maximum loss you would therefore be exposed to would be 5s, because we have talked about 5 trades. Then it would mean you will be exposed to 30 times 0.1 per standard mini lot size. A mini lot size gives you $0.1 per pip. So if you are talking about 30 pips and you're talking about 5 trades, then you are talking about $15 per 100, okay? That could be high, but that could be what you would be standing to lose if the trades move against you. But your also potential gain would be 30, 20, 30, 30, 30, 30. Now, the reason why I have mentioned here 20 initially is because one of the pairs, which is pound against US dollar, your normal, the target is normally 20 pips, all right? So basically, this strategy gives you generally something between close to 1-to-1 risk to reward ratio. Always remember that there is no strategy in foreign exchange which is a magic bullet. I think this is one lesson that all of us traders need to really put in the back of our mind, that we learn all these strategies, we learn all these things that that we learn in the market. If there was any one strategy that could always deliver what we are looking for, I think we would not even be training here. We would just go somewhere to some island somewhere, sit there in the beach and make our money, and we would not do anything else. But in the market, normally, any strategy will deliver provided you know how to manage that strategy correctly, all right? So there is no holy grail in foreign exchange. Now, and then a most important statement is what I've made here. Trading is 50% mental, 40% risk management, and only 10% skill or strategy. So whatever understanding or lesson that you learn is only 10% that contributes to your success in trading. So 40% is risk management and 50% is actually mental, psychology. And that is why there are more trainings, there are always mentorship trainings that you need to go through to be able to improve your mental understanding, your mental psychology on how to manage the market, okay, trades. So without much ado, let's now go straight in on how to trade the London strategy. How does the London strategy work? Now, before I do that, I'll talk about the advantages of using this, of trading this particular strategy, all right? Now, the advantages and why I have zeroed in personally on this particular strategy and I really want to master it is because it focuses on the most active session, okay, which is most volatile session in the entire trading sessions in the foreign exchange. Of course, you know that we have the Asian market, we have the London session, and we have the New York session. Now, this London daybreak strategy, as the name suggests, we are focusing on the London session. And of course, you know, the London session is one of the most volatile and most active session, meaning that you can get the pips you are looking for within this session and you can go home and dry without much further ado. All right, so, and more specifically, the other advantage is for Kenya, all right, for Kenya, and that is we are talking about Africa in general, we are talking about Europe in general, we are talking about Middle East, all right? Anybody who is in that region, in that latitude, region in time, will find this strategy most rewarding because it comes out, it is during our morning hours, okay? It's actually in our time, it's between 10 a.m. in the morning to about 12:30 p.m. in the morning, all right? So it's a very, very opportune time for us in Kenya to trade this. Somebody who is in the US will have to wake up early in the morning at 2 a.m., at 3 a.m. to trade this particular session. So we are very lucky that we have this, that we can trade this London strategy without a lot of stress. Now, the strategy is very simple, all right? Extremely simple. It doesn't require advanced technical analysis. In fact, the only thing that you need to know is how to place pending orders. More specifically, how to place sell stops and buy stops, all right? Sell stops and buy stops. We don't use buy limits or sell limits. We use buy stop and sell stops, all right? You can make as much as 500 pips per week. We are talking about more than 100 pips per day, all right? And we are talking about the pound pairs, the GBP pairs, all right, which are the most volatile pairs, Now, the strategy does not require you to predict the direction of the market, although it can be of advantage to you to know or to have a bias on the direction of the market, all right? Okay, so the next thing is the exact strategy. So what do you need to do? In this strategy, you observe the 1 hour candle, which is between 7 a.m. and 8 a.m. London time, which in our time, the Kenyan local time is between 10 a.m. and 11 a.m. Now, this is a modification of what Bas Koichman does. Bas Koichman actually talks about the time between 8 a.m. and 9 a.m. That is actually when the London session has fully opened, okay? So he says that you observe between 8 and 9 a.m., which in our time is between 11 and 12, okay? Now, the other thing that we are talking about here is that you are using the 1 hour time frame. This strategy, we use the 1 hour time frame, okay? Now, what you need to observe is that, okay, for Bas Koichman, this candle should not exceed 35 pips. But I've realized that sometimes, even when the candle is more than 60 pips, you could still trade and you could still achieve your target, all right? So check the 8 to 9 a.m. This is Bas Koichman's whatever. So for me, it is between 7 and 8 a.m. London time, all right? This candle plus its wick should not exceed 60 pips for me, okay? That's a modification that I've done. For Bas Koichman, this is normally 35 pips, all right? Then you trade as shown on the diagram. This is the diagram that I've shown. So normally what you do is that when this candle closes, that is between 9 and 8 a.m. So after 8 a.m., which is 11 a.m. Kenyan time, I would normally place my buy stop above the wick, either 5 to 10 pips above this level. All right, so I'll put my mark there, and I'll also put my mark a sell stop below the wick, 5 pips. So here, place buy stop 5 pips, but I've modified this to 10 pips. All right, so 10 pips above the high. Also, and then for this one also 10 pips below. So you put a buy stop above and you put a sell stop below. So basically what you are trying to do is that you're trying to say that if the market reaches this level, it will extend even higher and you will be able to achieve your target. And if the market comes below this level, it will go down and you will achieve your target. Now, take profit is 30 pips, okay, for all the pairs except the pound against US dollar, which is 20 pips. Now, that's where the 20 pips that I mentioned earlier comes in. Otherwise, the rest of the pairs of pound, we are talking about pound against Japanese yen, pound against Canadian dollar, pound against NZD, pound against AUD is 30 pips, all right? You put your stop loss in the opposite side, that is 35 pips, but normally I would put this around 50 pips for me, sometimes 60 pips, sometimes 40 pips, depending on how the market moves. Actually, I would modify this as the market progresses, all right? Now, when the buy or the sell order is activated, you cancel the opposite pending order. All right. Now, so far, if there is anybody who has a question on what I've described about the entry point, maybe you can type in there. But if you have understood what I've said so far, maybe type in there 111, and then I can know. Then I'll proceed briefly. Okay. All right. Okay. So I want now to go to the next point. Thank you very much. Thank you very much if you have understood that part. Now, some of the things that you might need to do as the market progresses is to check for market news, all right? So check for high impact news on pound, okay, that impact on pound and maybe dollar. And this you would, of course, normally check either in the Forex Factory or many of the other websites that give you that kind of information. Now, most of the news on pound are normally released at 12:30. So hopefully by 12:30, your trade may not have executed. But in some cases, for me, my trades will normally have gotten executed by this time. But this is one of the things that Bas Koitman normally mentions, okay? If your trade is in profit 10 to 15 pips, move your stop loss to break even. That is between 1 or 2 pips within your brokerage fees, okay? Okay, and of course, remember to cancel your opposite trade. Now, these are some of the trades that I studied the previous sessions. I don't want to belabor so much about these points right now. So I'll move quickly and probably share with you exactly what I mean by how to enter these trades. So allow me to share, okay, allow me to share my trading platform briefly and show you exactly one of the ways in which you can enter your trades. So let me get my MT4 on. Okay, so here we have the MT4. All right. So one of the strategies that I have I've come to realize and modify on this in terms of how to enter your trade, and let me get a new page here. This is the pound against US dollar. This is the 1 hour. Okay, let me remove the grid. Let me increase this. Okay. Okay, let me get it to candles. Okay. All right. So this is the pound against US dollar. So one of the ways that I have found helpful, especially trading this strategy, and probably any other strategy that you want to trade, is what we call enter only when on the retest of that particular level. All right. So for example, let me just insert here an indicator that I use to know the sessions, to divide the sessions. Okay. So that I can identify the London session. So this is an indicator that shows you the different sessions that we have. So Friday began here and moved all the way to this place here. Now this particular box here is the Asian session. All right. And this one here is the London session, and this one here is the New York session. Now, the candle that Bas Koitman talks about is this last one here, but the candle that I prefer myself, that I trade, is this particular candle here that is at this point here. So what I'll do, I'll mark this particular candle here. Okay, let me get the line. What's the name of the indicator? Now, this indicator that I'm using is a custom indicator. All right, this indicator is a custom indicator, and you can only get it probably from me. I can actually send it to you. Yeah, so it is not an indicator that you get out there. There are many other indicators that can divide the sessions. Okay, so I like this particular one because it plays very well into my strategy. All right. In fact, some of the tools that I use this particular indicator, and I also use an automated EA. All right, an automated EA that places my trades automatically, because I've realized that at the close of this particular candle, to be able to draw all those lines for all those 5 pairs, it becomes cumbersome for me. So I would like just an expert advisor that is able to place the pending orders for me, but it gives me the ability to modify those particular pending orders. So so that's also something that you might want to use to help you trade. Now, I want to place a line here on this particular on that particular candle. So that is the candle that we are talking about. Now, the second candle where the trade was triggered is the second one, which is this one here. I'll mark it again by a trade line. So this is the candle that I observe. Let me remove it first of all so that you can see where the end of that. Let me put a line at the end of that. Okay, so that is the top of the wick. Now, so normally you would count 5 to 10 pips away from that. Okay, which is somewhere here. All right, so you would place your line somewhere there for 10 pips, which is generally 5 pips above that, 5 or 10 pips. All right, so that's where your trigger point is. Now, so let me mark again my line here now that I've marked those lines. So I have those lines there. Now, we put we can go to a lower time frame, say 15 minutes, just to be able to see exactly when this particular trade was triggered. All right, so the trade was triggered, that is 15 minutes, no, 30 minutes into the into the London session after this particular session has ended. Now you can see this is the candle that triggered the entry. Now, what I normally would say is that for the best entries, do not enter the first time this candle breaks through this the whatever. So you use the retest. Now, how does the retest work? Let me just mention it here, show it here. So if you have your entry point, for example, if this is your entry point, we use what is called a retest, and a retest works out like this. You allow the market to go past your retest, past your trigger point, and you wait for a retest on that particular line. Then you will enter when the market now expands upwards. All right, like that. So let me just confirm that you are with me on that one. If you are with me on that particular retest, in fact, you remember what we normally say, that no retest, no entry. Okay, so if the market does not retest that particular level as support or resistance, then you do not enter that trade. All right, so if you check exactly what happened here, what happened on this particular case here, you will see that the market actually moved from here, okay, from lower, sorry, it went past our trigger, past our line, and there was a retest, okay, and the market now expanded upwards. All right, and if you check how many pips that one was achieved, was how many pips? That's already 28 pips. So your 20 pips was easily achieved. All right, on that. So that is quite, this retest strategy is very important in terms of being able to limit or reduce your drawdown. Because if you enter this trade, for example, at this point, you would only suffer a drawdown of very, very minimal pips. Instead of, if you had entered here on the first trigger, you would actually have suffered a bigger drawdown. All right. So if you have gotten that particular point that I've just mentioned about the retest and how to best enter your trades, type in 222 on the chat screen. All right. So that is a very important point that I wanted to mention in terms of the London day strategy, London daybreak strategy. So basically, make sure that you do not enter the first time your entry level is triggered. Enter on the retest, and if there is no retest, do not enter the trade. All right, do not enter the trade. You can even check after you've entered this and you've made your money. Also check what happened. The market came down and also triggered the lower side. Probably we would say that it triggered. Let me move this line. Sorry. So if I move this line, probably triggered around there. Now, if you decided not to enter on this trigger, okay, you would have made your money if you entered on that trigger, but that would be chancing too much. You would have had to. The best way would have to wait for the market to get for a retest on this particular move, this retracement. So this retracement, let me just use another line. This retracement here would have indicated to you the moment the market now expands downwards. All right, you would enter a new trade. Although you would get some drawdown, but it's much safer to trade in that particular order. All right. So you would probably wait for the market to retrace and probably now enter probably at this level here when it is now expanding downwards, and you would have gotten another 20 pips for the pound pair. Now this is replicated for the other pairs of pound. That is the GA, the GCAD, Japanese yen. Okay, all of them actually had that particular spike, and for me, I achieved my target very easily on Friday. So basically, that's how you trade the London strategy, right? And I think I basically come to the conclusion of my training tonight. If there is any other question that somebody has, probably you can unmute yourself. All right. If you want me to unmute you or something, and then you can speak, say what your question is. If you have any, that will be fine. Okay. So anybody who has any question about this? All right. Now, the beauty about using the retest strategy also is that you will be able to avoid fake out expansion of the market. All right. So the market would have expanded in the opposite direction, and before you enter, you are already on a drawdown and you are going for a stop loss. All right. So that's also quite important, this particular item that I've mentioned today. All right. All right. So there being no question, probably I was very clear, or maybe you did not understand nothing completely. All right. So thank you very much, guys. If you got value, put in there 555, and I wish you a good evening. Make sure you attend the market mastery at 10 o'clock. Make sure you also attend the 1 o'clock chairman mentorship call. A must. All right. Thank you very much. Be blessed, and let's have a powerful trading week. Thank you, and God bless. Thank you all.